News 8 at Sunrise in high definition continues.
Welcome back. CPA Chris Gamble from Kroner, Gamble & Company back with us. Chris, good to see you.
Thank you. Good to be here.
So this morning we're talking about finances and marriage. Interesting topic. What are some of the first financial discussions couples should consider when they get married?
Probably one of the most important and first discussions couples should have is discuss their financial goals with each other, both short-term and long-term. This will help set the stage for how finances will be handled moving forward in the relationship. It's also important to note that it's really not a one-time conversation. It's something that should be discussed throughout the relationship. There will likely be changes, maybe a job loss, a job change, children, buying or selling a home that might require some change in the financial strategy.
Right, that initial scenario will evolve over time.
It will.
What happens once you've had that initial conversation? What else should you be thinking about? What's next?
Well, really, the couple should sit down and honestly discuss their financial situation with each other. We want to share your income. You want to share your debts, your expenses, both your fixed expenses such as your rent, your car payment, your mortgage, your variable or discretionary expenses, dining, clothing, vacations, those things. Once you do that, then it's time to decide if and how you'll consolidate finances.
Right, you want no surprises in the relationship financially, and then you got to figure out how to pool your money, or if you're going to pool your money, right?
That's correct. And it's important to note there's no one correct answer for everybody. Couples will need to decide what works best for them. Some of the typical arrangements are, you know, everything gets thrown into a joint pot and all of the bills are paid up from that. Also, sometimes couples will each put 50% of the cost of the joint bills into an account. They'll be paid from that account, and they keep the rest for themselves. Another arrangement is, depending on your income, if one couple earns 60%, one individual earns 60%, they would contribute 60% towards the bills. And then lastly, sometimes there really is no consolidation. You just split the bills. Somebody pays bills A and B, and somebody else pays bills C and D.
So once they figured out how they're going to kind of pool their income, what else should they be thinking about? What's next?
Well, one of the next things should be a plan to either pay off or reduce debt. Consider some long-term savings plans, both retirement and after tax.
And what about considerations outside of spending and savings within a relationship?
Yeah, there are other items to be aware of. One would be beneficiary designations on life insurance policies, IRAs, 401ks. You'll also want to make sure you update your estate planning documents, such as your wills and any trusts you may have. You'll want to consider the change in income taxes that being married will bring about. And then if one individual is going to change their name, you want to inform the appropriate agencies like the Social Security Administration, your bank account, your banks, and your credit card companies.
Okay, all obviously important steps to take.
Yep.
The last thoughts on this subject?
Well, as is any important issue in a relationship, communication is key, and finances is really no exception if you want to have a healthy financial relationship.
So when you get together, have that conversation. Chris, thank you. Good to see you.
Thank you.
We'll share this conversation on our website as well. You can find it at rochesterhomepage.net.